Okay, let's talk about price action. So price action is probably the biggest thing that you need to learn as a new trader, especially if you're trading Forex, crypto, or stocks. It is single-handedly the best thing that you could use in your trades to understand exactly when to buy and sell. And today we are going to teach you how to use price action, what it is, and everything about it from A to Z. And then at the end of the video, I'm also going to show you exactly how you can make it better by adding two simple indicators alongside the price action trading to give you an insanely high win rate. So without further ado, let's get into the video. In this video, I'm going to show you exactly how you could draw a chart just like this that will help you predict exactly what's going to happen in the market using nothing but trend lines and supply and demand levels. And this is the key concept of trading price action. So the first thing we're going to talk about is candle movement themselves. Okay, so the first thing that I want you to understand about the market is that it moves in three different ways. The first way is called an uptrend. It's when the market creates higher highs and higher lows, just like this, guys. It's never going to move in a straight line upwards. There's always going to be a little bit of a correction going downwards in an uptrend. This is what we want to look for if we're looking for buy opportunities. Next, guys, we have the same thing, but the reverse. This is called a downtrend when you're making lower lows and lower highs. Now, this is where you're going to be wanting to short the market. This is where you're going to make money predicting that the market is going to go down. And finally, guys, there's one more way that the market can move, and that is sideways. It's when you're not creating any new highs or new lows in the market, and you're following a pretty much straight line throughout the chart. This is called a sideways market when you're looking at the chart. Now, one thing that's very important to understand about these is that this is the external price action, guys. Let me show you exactly what I mean. So let's say we're in an uptrend. This right here would be the overall trend. So the price is going up, then going down, up, back down, and then up again. But inside of these movements, there is smaller movements, and this would be considered the internal movements. It will look something like this, guys. It's not always going to be very clean, but you're going to be able to see an overall pattern of the price either going up or going down within that market range. So let me show you guys exactly what I mean by this on an actual chart so you guys can see a live example of it. Okay, so let's take a look at this chart, for example, right here. We can see very clearly that over here, the price was in an uptrend. It created new highs, new lows, just like this, right? This right here, guys, would be considered an uptrend. But inside of this uptrend, there was also the internal price action, which looked a lot like this, right? The price went up, came back down, broke some lows here. This would be the internal price action inside of what's happening over here. This is what we're going to have to pay attention to as well when we're looking at the markets. So you're going to notice that the price is never going to look extremely clean, and it's always going to look a little bit choppy. But once you get used to looking at the chart, you're going to be able to understand exactly what's happening with the price. Now, let me show you guys an example of a bearish scenario. Okay, so let's take a look at this chart right here, and we can clearly see that we are in a bearish trend right here. You see that the price is creating lower lows and lower highs consistently on the market, and this is giving us a nice bearish trend, right? Now we can see, if we look a little bit deeper, we can look at the internal and see what's happening there. And we see very clearly, guys, that over here, when we start to look inside, there's also price action movements happening inside at all times. So we can see the price going up, going back down. This would be considered the internal movement that's currently happening inside of the chart. And we want to be able to look at the chart and understand both of these when we're looking to kind of analyze the market. And now I'm going to show you guys an example of a sideways market. Okay, now here's an example of a sideways market. We see very clearly right over here, guys, that if we were to take the tool, the rectangle tool, we see the price was staying inside of a box for a very long time. This indicates a ranging market, guys, before it was eventually broken to the downside. So this is what a sideways market looks like. Okay, so now that we understand how to look at a chart and understand if it's a bullish, bearish or sideways market. Now we have to talk about learning how to use trend lines and supply and demand levels and together in conjunction to decide exactly when is the best time to place your trades inside the market. Okay, so now let's talk about trend lines before we get into supply and demand levels. So a trend line is very simply just a line that connects the highs and the lows of a trend. So for example, it's a line that looks like this. Right now we see that on this uptrend, this trend line is connecting the lows as well as connecting the highs. And this gives us potential areas of support and resistance where people might look to buy or sell a given asset. So this is exactly how it would look like for a bullish movement. And now this was what it would look like for a bearish movement. Again, we're just connecting the lows and the highs together, guys, to create a channel or a more clear, visually visible trend. Same with a sideways market, basically just gives you guys, again, the top range and the bottom range of that sideways trend. And people could look to trade this, again, with supply and demand levels, which we're going to get into right now. So what is supply and demand levels? Supply and demand levels are given to you by the market themselves. These are areas of major psychological events. Let me show you guys exactly what I mean by that. So let's say right now we are looking at the chart. We see that the price went up, came back down, and then went back up again. And we can see a very clear trend line on that trade. What's going to happen is that the majority of the people that are trading are also going to see exactly what you see on the chart. They're going to understand that whenever the price comes and touches this trend line, there could be a buying opportunity. So what's going to happen is that people are going to look to buy on that area. And if everyone starts to buy at that area, then the money is going to move the price up, guys. That's how simple it is. What you want to do is you want to find where everyone else is going to buy and you're going to buy with them. And that's exactly how you can make money from trading. So let's take a look at the sideways market. We see that if every single time the price goes up, touches this area, and then drops back down, then it's very likely that the next time that happens, the price touches this area, it's going to drop back down again, guys. And that's what we want to look for. Same thing. So let's just say we see people coming up over here, and every time it hits this level, then the price bounces up. Chances are that everyone's going to buy at this level again once the price hits that level again. Now, let me show you guys an example of that in a real-time chart. All right, guys, let's take a look at this chart right here, okay? We see very clearly that over here in this section, we had a sideways market. And we see that every single time that the price touched this level, the price ended up falling back down. And every single time that the price touched this level, the price eventually went back up. Right over here, guys, here, 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 and over here very slightly. But this is areas of supply and demand in the market. Now, one thing I want you guys to understand about supply and demand is that it's not always going to be an exact, very narrow line. Sometimes it's going to look like this. Sometimes it's going to be a box, so an area. So it could be something like this, guys, where it's a little bit bigger, but generally, if the price touches an area, then the price is going to fall back down. And as we see, guys, this happens in the market frequently. We see that the price dropped around this level, and the next time it came back up to this level, everyone expected the price to fall because the last time it hit this level is exactly what happened. And as we can see, we could have taken a trade here where predicting the price going down, and we would have made very good money on this trade. Okay, so let's take a look at this chart right here. We see very clearly that we are in a downwards trend, right? We're making lower lows and lower highs. Next, we see that this area right there, especially over here, was a very strong area of supply at that time. And we had a very hard time breaking this level before it was eventually broken. And then this level became demand because it had a hard time breaking back under it eventually before it was broken. So this creates a very strong key level in the market. And as we can see that the price is currently approaching it and touched it. It touched both the supply level as well as the trend line. So over here, we can take a very educated guess that almost everybody is going to look at the chart the same way we do and predict that the market is going to go down based off what we're seeing on the chart. So what we're going to do here is very simple. We're just going to short the market. We're going to take our position size tool. We'll set our stop loss above the supply level, so above the resistance, and we want to target the previous lows. We see very clearly that over here is a very strong previous low. So what we want to do is we want to target that low right there. This is the type of trade that we want to take. And as we can see very clearly, the price ends up continuing with that trend, falling down, and eventually hitting our take profit. And we would have made a very good trade there, and we made a lot of money on that trade. Let me show you guys a few more examples of how you guys can look at the market, establish the trend lines, establish supply and demand levels to predict the market and see exactly where it's going to go next. Okay, so what's happening on this chart right now? If we look at it, we see very clearly, again, we're in a downtrend, right? Every time the price hits this trend line, the price falls. This gives me confidence that it could happen again, right? Next, we see we're at a very strong key level of supply. Where do we see this? We see this right here, guys. The price has a very hard time breaking this level. Price rejected this level multiple times before eventually breaking it. And as we know, a supply can switch to a resistance level if it ends up being broken. So right now, we are expecting this level right here to become a very good resistance or area of supply. They're really the same: resistance, supply, demand, and support. Very much the same, just different ways that people look at them. Now, we see that this is a potential area that we can enter a trade, and we want to target the previous lows, which would be right here, because we have a very strong supply level in this area, and we see that the price is having a hard time breaking this level right here. So what we're going to do is simply just take this trade again to the downside, just like this. Our stop loss slightly above the supply level, and we're targeting the lows over here. And what's going to happen? The price rejects that trend line and eventually goes down and hits our take profit right there, guys. So again, we won that trade. Now let's look at a new opportunity here. We see that the price is eventually going to go up and back into that trend line. Now, what's going to happen here is that we're looking at the price and we see that it is going a little bit past our trend line, but that's okay. That's fine. Trend lines can break sometimes. What's more important would be this demand level. We want to see if this demand level holds. Is it going to hold? Yes, we can see that the price is again rejecting supply area. So this right here is what we call a fake out. A fake out is when a trend line gets broken, but the price is still very bearish in this scenario. So we could take another trade right here, guys. We can again go short right here because we see what everyone else is seeing, that every single time that the price hits this area, the price eventually falls back down. And we set our stop loss and our take profit, this time targeting the new lows created right over here. And what happens next? We see that the price eventually going to respect that area and eventually fall back down. And we're going to make very good profit on this trade again, guys. This is exactly how you want to look at the market for when you want to look at trading price action. Now, let me show you guys a few more concepts about price action that we can trade. And then after that, I'm going to show you guys how you can combine it with indicators that will tremendously increase your win rates. Okay, so I just showed you guys exactly how you can draw trend lines and catch trades on the trend over here and over here. Now I want to show you guys exactly how you can catch reversals of trends. So when the price goes from a very bullish to a bearish market, I'm going to teach you exactly how you guys can spot that in the market so you guys can trade that as well. So what we want to do here is we want to establish a nice clean break of a trend line. Let me show you guys exactly what I mean by that. Okay, so here's an example of what I mean right here. We see very clearly that we have a very strong uptrend right there. We were creating higher lows and higher highs until eventually the price started to fall and started to create lower highs, as we can see right over here. We can draw another trend line just to visualize it a bit, just like that. We saw that the price broke this trend line right over here, and we can see very clearly that now it's retesting an area that was previously demand, but now is an area of supply right over here, guys. So what we want to see here is we want to see the price kind of reject off of these areas right over here on our charts, and we see just that. This gives us confidence that the price is going to establish a new trend and most likely a downtrend. So what do we do here? We can again take another short position, our stop loss above the last resistance slash supply level. And over here, we're going to target the lows that we had previously. And as we can see, guys, this is what's going to happen on the trade. The price is going to go up a little bit, but not to worry. We're still following the trend as we can see. And this is exactly what we want. We want to establish a new trend, catch it a little bit early, but eventually that price is going to go down and it's going to end up hitting our profit because we are riding the new trend. And trading is as simple as that for price action, guys. And right there, we end up hitting our take profit. Very, very simple. Now that we understand exactly how to trade price action and what to look for with supply and demand levels, now let me show you guys how you guys combine it with indicators to even make it better and increase your win rate, especially if you're a new trader in the markets. Okay, so let me show you guys an indicator that works extremely well alongside price action trading. So what I use is called EliteAlgo. This is what it looks like. It gives you buy and sell triggers directly on the chart. And it also gives you the areas of supply and demand directly on the chart for you. So you don't actually have to draw them yourselves. The only thing that you would want to draw is your trend lines. That's it. And this is the beauty of using indicators like these whenever you're trading. It just simplifies everything. Let me show you guys what I mean. So over here, we see very clearly, we have a pretty strong trend line upwards, right? We see the price touched once. So all we really want to do here is just wait for the price to retrace back into the trend line and then take one of these signals. And then we can see that we could have taken the signal right here based off price action trading, and we would have made really good profit on that trade. It's very, very simple, guys. Again, like over here, we have a trend line going downwards. Right here, guys, couple touches, price went back up, pretty much got really close to the trend line. Then we got a sell signal right around a demand level right over here. And I guarantee if we actually use a bar replay and go back to the signal when it was given, there's probably going to be a supply and demand level printed for us. Yeah, right there. See, it showed us in this area that we had a very strong supply level that we could have traded as well with this signal. And then simply all we have to do from here is simply just take a short position where the signal is, our stop loss behind that level, behind the supply, and then just either target this demand right here, but that's a little bit too close. So, or we can just target this one. That's a little too far. So we can just go maybe halfway through and then just take that trade. And as simple as it is, this is exactly how you could have taken that trade in this market right over here. And you can see it's following the trend. So we are safely to stay in the trade until it hits it right about here, guys. And that would have been a very easy trade to take simply by using this algorithm. So let me show you guys a few examples of how you can combine price action with EliteAlgo and take it from there. And that's going to be it for the video. Okay, so let's take a look over here, guys. What do we see? We had an uptrend that was eventually broken and created a downtrend. Then the price failed to break this level around here, and the price broke above the trend line that we had previously. Now we have the price going up and coming back down to retest a very strong support slash demand level. Then we got a buy signal at this area. This would give us exactly what we're looking for. We're looking for a trend change. It looks like we had a trend change. We're looking for a price bounce off a strong supply and demand level. We have a very strong price change and bounce off of demand level right here. And then we got a signal as our confirmation. And not only that, it's also a buy signal with 4 stars, which indicates that there's a lot of confirmations going on with this algorithm to tell us that this will be a very good trade. So simply over here, what we do, take a long position and we simply just put our stop loss behind the demand level, and we want to target one of these supply levels up here. We can target something like this, for example, which gives us a good risk reward ratio of 1.42. Then we just take that trade. And as we can see, we're still going to stay in the trade because, again, we're riding the trend here. We can see that the trend is establishing, guys. You see that? We have an establishing trend. Then we got another buy signal, another confirmation that the price is still going to go up. And then we can see price ends up shooting up extremely fast and hits our take profit here. And that's exactly how you guys can use this algorithm when you're trading alongside price action and increase your win rate. And using this type of strategy can give you a win rate of anywhere between 60 to 80% in the market, which is extremely high. Now, obviously, there's no such thing as a 99% win rate. So anybody who tells you that is lying. But having a 60% win rate to 80% win rate in the market is incredible. So why is it incredible? This is why it's incredible. If you have a 1-to-1 risk to reward ratio, then you only need a 60% win rate to be profitable. If you have a 2-to-1 risk to reward ratio, you only need a 40% win rate to be profitable. And if you have a 3-to-1, you only need a 30% win rate to be profitable. Now, using a strategy like this can get you a 3-to-1 or even a 2-to-1 risk reward ratio at around 60%. So you're going to make a lot of money trading in the markets by using price action and EliteAlgo together. And that's pretty much it for this video. If you guys like this video, hit that like button, subscribe, and turn on that notification bell. And if you have any questions, leave them down in the comments below, and I'll answer every single question that's asked inside this comment section. Other than that, guys, thanks for watching. Have yourselves a good day.